All right, this is week 47, Outlook one of two, highly anticipated by some. All right, so let's go ahead and get into it. This is the watch list that I'm looking at. We're going to go over Euro USD, GBP, NASDAQ. Not really going to look at the NZD USD or USD CAD. We're going to look at UJ, and we're also going to look at gold. Some caution or some emphasis on the NASDAQ we're going to focus on here. And then to clear up some things, and then for the other pairs, we'll do as scheduled. So let's go ahead and start with the other pairs, and we'll end off with the Nasdaq. So for Euro USD, primarily we're essentially looking at this as a bullish run still, where if we look at the overall price action, this is breaking out of basically a bearish range here, and we've been running ever since. We've only very recently generated some sort of bearish price action here. But if I were to mark out the key structural points according to how I see them, we have essentially this high here just from current price action. So that low, and then we have this high here. Oop, yeah, I'll turn out. That's fine. Then we have this low. Then we ultimately have this high here. And then we had this action occur where this would be debatable if it's a liquidity draw or a break of structure. I would move towards, or I would err on the side of liquidity draw based on the fact that it did, close below, but immediately ran back up. So all we did was shift this structural point here inside of this bullish run to here. So this would be no longer the structural point there. And then ultimately, all of this inside of here is or just internal liquidity, internal highs and lows. And then we ended up generating the next liquidity point here. Now, where some confusion or some debate could be held is that, hey, this sort of looks like the same thing up here of the action where we had a draw on liquidity there as we did here for this structural point. Well, this is where we look into the principles or the idea of structure in the first place is if we're in a bullish run, according to the market states, I'm only really cared about the structural points, which are the higher lows being held. I don't really care what happens at these highs as long as they get swept. And ultimately, that's going to happen anyway because that's what's going to generate the price leg. So if you see how we swept this high here, we performed a liquidity draw here, that exact same thing happened in which we had a liquidity draw, then we had a pullback, very slight pullback because all of this price action here is balanced to mitigate this price gap here, creating that structural point higher. So we had a very, tight transition from liquidity point, structural point, and then run to create the next price leg. And that generated that high. Where you can see is this high was actually broken in the form of a break of structure, air quotes. And then we had a pullback, unwillingness led to a draw on liquidity here at that structural point, which shifted this. This is what I would be more drawn to look for transition of states rather than the liquidity points in this case being mitigated. So in a bullish run to me, liquidity points are always the highs, and then the structural points are my higher lows here. So until we break a structural point, I don't really see this as a transition of market state, i.e., we're not transitioning from a bullish run into a bullish range until we break this low here. If we have a break of structure at this low, then we will then have a bullish range generated from that low up to the highest liquidity point that generated the break of structure. But until then, I assume, and we can assume, that this is still in a bullish run. All right. So I'm not going to, look at this, and all of this right here is currently just looking at the price leg of this low to this high, and all this bearish price action is similar to this internal price action during the impulse. This is just the retracement to fill in any sort of liquidity that was left unmitigated. So essentially, now that we've, balanced this price leg, so to speak, we see, hey, what's going to happen next? That's where we can look for potential transitions. Do we, continue lower to take out this low? And if we do take out this low, what's the action that occurs here? Is it a liquidity draw or is it a break of structure? If it's a break of structure, well, the next action or the next state that I just said. If it's a liquidity draw, then similar here, we look for the transition of shifting the structural point lower and lower, and then look for continuation of that trend. So that's what I see on Euro USD right now. Still full steam ahead on a bullish trend. Yes, we have a lot of consolidation. This area is very consolidated, but as of right now, still sticking to the overall bias and market phase or market state, we are in a bullish trend. It's just very tight here. So we're coiling up for some sort of action, so to speak. All right, moving on to GBP USD. We're still stuck inside of this area. Like I said before, we actually on GBP USD had transitioned out of the bullish range that was generated from this low to this high, and then we broke structure downward. So we transitioned from a bullish range into a bearish run, and then we looked for potential transition to solidify this price leg, which we discussed in previous outlooks. So we're actually in a counter trend position here. We're swinging it, and it's very, very consolidated. So there's a lot of battling on bulls and bears here. I'm part of the bull side right now, looking for a counter trend or looking for the solidification and continuation of this counter trend trade to solidify this price leg. And if this price leg is solidified, then that's when I'll start looking for sells in the premium to continue this bearish run, looking for targeting this liquidity point here, or this previous structural point, which is now a liquidity point because we transitioned from bullish range into a bearish run. Then I would look for this is my target. But like I said, err on the side of caution. This is a this is a counter trend trade. Just put it that way. It's counter trend. So if it fails, I'll know why, and we'll just have to wait for our price action to develop to set up new opportunities, new swing trades for me. If not, I'm looking for this to be the crux that leads us to solidifying this price leg by taking out this internal high here, a part of this bearish run, and that gives us the next price leg to start running lower and lower towards this target here and potentially lower targets. All right, like I said, we'll go over NASDAQ last, not going over NZD, not going over UCAD. UJ, all right, UJ has finally decided to give a little bit of motion. We're moving toward, we cleared this first internal liquidity point here on the premium side. That was after the mitigation of this price gap here. Once we cleared this liquidity here, we ran higher to clear this point, and it looks like price is moving up towards the next liquidity point. Once that liquidity point is taken, we're still waiting. We're not going to act on it. We have our areas of interest marked up, so we'll look for price action plays off of our area of interest here, and then we also have this very high area of interest noted. Still skeptical on it, but I have it marked up because it does fit the profile for my areas of interest. But this is promising. So UJ is finally starting to give us something to actually pay attention to. We just got to still wait a little bit longer. So that's that. All right, and then on gold. So misinterpreted this the last time. I saw it as a break of structure here, but I believe I talked about it in the last outlook, if not one of the trade reviews, that this was actually a pullback and a liquidity draw of this low here to mitigate this price gap existing here to continue the bullish run. It mitigated 100% of it, and then that ran higher. Now, this is where we have something very interesting going on. One, a lot of people would see this as some sort of, order block, sponsored candle, area of interest, point of interest, whatever. This. And then we also see this price gap here. To me, if you know how I've described things multiple times now, I like to see uninterrupted price action to establish my areas of interest. And because this area of interest does not have uninterrupted price action aiming for taking out, this low here, then I don't really see it as a valid area of interest. That's just based on my framework, my models. So even though, we're getting some sort of reaction, some sort of response here from this price gap, I just don't see it as the move that's going to take us lower here. If it does, so be it. I miss out on the trade. But based on the model, I want to see uninterrupted price action in order for us to, move lower. So what I'm biasing now, based off of the reanalysis from the previous outlook, is continuation of the buys here based on mitigation of this price gap, which is in line with the pro trend bullish run. And so now what I would be looking for is, this mitigation, and then we run this internal high here. And then now we have this price gap that price mitigated today, close to 100%, 50%, we'll call it 50% got mitigated. And now, we closed inside of it. What we would be expecting is the transition to continue higher. If it fails, then we'll, do another outlook and reanalyze. But still assuming I can't really justify that this entire market's going to transition based off of a price gap shown near the all-time highs, especially after justifying why this transition in the first place from this bullish price gap here. So essentially what we're looking at right now is continuation and biasing that this will continue higher to take out the all-time highs, which just happens to be the last liquidity point. So yes, we got a reaction here. It's very valid, but this is a kind of trade that I would have taken in the past and expected for price to come lower. And that would, to me, this is a counter trend trade setup that I would, not going to say wouldn't take, but based on the analysis that I've done here and seeing the formulation of the price action, I would prioritize looking for buys off of this daily price gap here in order to push us higher. But we'll see what happens. All right, now what everybody's been waiting for. So, on the NASDAQ 100, there's a couple things I want to say here. The first is, as everyone knows, I trade futures and I also trade CFDs. So have to be very cautious with how I do my analysis on both, because the charts they're similar, but they provide different actions and perspectives. So what I may see on a futures chart, maybe it will be different than what I see on a CFD chart. And so one of those instances is actually the formulation of liquidity points and structural points. So on the CFD chart here, what we actually ended up getting was this, I guess, liquidity draw of this previous high ever so slightly here. But on the futures chart, this never got broken. And so my structural point on the CFD chart is here, but on the futures chart, it's still this low here. And so what that leaves me to say is, on the futures chart, my price leg actually exists from this low to this high. So even though I saw this as a liquidity draw based on the CFD chart, and then, essentially another liquidity draw, if I'm basing it off the futures, this was just the pullback that I'm seeing in order to mitigate liquidity, something inside of this wick here as an area of interest, and then looking for price action to continue higher. So actually on the futures chart, I'm actually in a trade based off of mitigation of this wick here, and looking for price to continue higher. On the CFDs though, it would have to be a little bit more justification and have to pay more attention to the actions. And so what I'm really trying to say here is that the price action is similar, but there's going to be different tools or different perspectives you're going to have to utilize when you're looking at a futures chart versus a CFD chart and analyzing it a little bit differently. Whereas, like I just said, on the CFD chart here, this is my last structural point. It got drawn on liquidity, and then that shifted here to this low, and then now we have another draw on liquidity, so that could have potentially shifted the structural point to this low, and still expecting price to run higher, because we've not broken structure to the low side. All we've done is tap, and looking for here. On the futures chart though, all this was a pullback into an area of interest, which was this wick here, And the reason why I say that wick mitigated essentially that there ever so slightly. This is the same thing on the futures chart, and then actually we're looking at here. This had uninterrupted price action that led to mitigation of this liquidity point here, and that led to the creation of that structural point. On the futures chart, though, this ended up actually not breaking this high and then giving this the same move, but without the break of the high here. Whereas this right here would be the structural point that led to the break of that high. So as of right now, though, if I'm going to go based off of the CFD charts for this analysis, which is what I'm doing, um, what I'm seeing is basically multiple liquidity draws. So we had the first liquidity draw here, then we had the second liquidity draw here, and we dipped into this wick here, still the same thing. And now what I'm looking for is the transition based on this liquidity draw to move price higher, continuing this bullish run. So all I'm seeing here is shift a liquidity point to this new liquidity point, or not liquidity point, this new structural point to this, or the old structural point to this new structural point here, and looking for a price to continue higher. So as the day opens up, looking for, price to respect this area and then run towards all-time highs. If not, then the counter analysis is that this is full on about to transition into a new market state. And so if like I said, like I always say, if the market takes out a structural point in the form of a break of structure, then that will transition us from a bullish run, which we've been in since this low here, which we've identified, into a bullish range, which would exist from this low all the way up to this all-time high. So we're going to see what happens. Peace.